Imagine making $1 billion in a single day, not from launching a company, not from inventing a game-changing product, but from a single bet, one so powerful it forced an entire country's government to surrender. This isn't fiction. It happened on September 16, 1992, a day that financial history remembers as Black Wednesday. And the man behind it? George Soros. Soros is one of the most famous and infamous figures in the world of finance. Some see him as a visionary investor, a man who mastered the global markets. Others view him as a ruthless speculator, a financial predator who profits off economic crises. But how did he pull off one of the boldest trades in history? And what makes Soros such a controversial figure even today? In today's video, we take a deep dive into the life, strategies, and legacy of the man who broke the Bank of England. Who is George Soros? To understand George Soros, we need to go back to Hungary in 1930. Born into a Jewish family in Budapest, young Soros lived through the horrors of World War II, surviving Nazi occupation by using fake documents and working for the Hungarian Ministry of Agriculture. After the war, as Soviet control tightened over Eastern Europe, he fled to London in 1947, where he enrolled at the London School of Economics. There, he studied under the famous philosopher Karl Popper, whose ideas on open societies and democracy would shape Soros's later philanthropic efforts. But before he could change the world, Soros had to make his fortune. He moved to New York in the 1950s, working at various financial firms before launching his own hedge fund in 1969, the Quantum Fund. Over the next 2 decades, he built it into one of the most powerful hedge funds in history, with returns exceeding 30% annually. But Soros wasn't just any investor. He was a macro trader, someone who made bets on large-scale economic and political trends. He didn't just invest in companies. He bet against entire currencies, stock markets, and governments. And that's exactly what he did in 1992, when he saw a fatal flaw in the British economy. How Soros broke the Bank of England. In the early 1990s, the United Kingdom was part of the European Exchange Rate Mechanism, ERM, a system designed to keep European currencies stable before the euro was introduced. The idea was simple. Britain agreed to keep the British pound within a fixed exchange rate range relative to the German Deutsche Mark. If the pound weakened, the Bank of England would intervene by buying pounds or raising interest rates to attract investors. But there was a problem. Britain was facing high inflation and weak economic growth. The government had raised interest rates to support the pound, but that only made borrowing more expensive for businesses and homeowners, slowing the economy further. Soros and his team at Quantum Fund saw the writing on the wall. The British pound was overvalued, and sooner or later, the UK government would be forced to let it drop. So, Soros decided to bet against the pound. The billion-dollar trade. Soros and his team at Quantum Fund borrowed billions of pounds and immediately sold them on the market, expecting their value to fall. This move, known as short selling, works like this. 1. You borrow an asset, in this case, British pounds, at today's price. 2. You sell it immediately. 3. When the price drops, you buy it back at a lower price and return it to the lender, keeping the difference as profit. At first, the Bank of England fought back. They spent billions buying pounds to prop up its value. Then, in a desperate move, they raised interest rates from 10% to 12%, then to 15%, hoping higher returns would attract investors. But the market didn't buy it. Traders around the world followed Soros's lead, dumping pounds en masse. The Bank of England was burning through its foreign currency reserves, and by the end of the day, the government had no choice but to pull the UK out of the ERM and let the pound devalue. It was a financial bloodbath for Britain. For Soros, it was a $1 billion payday. From that moment on, he became known as the man who broke the Bank of England. After his historic trade, Soros became more than just a hedge fund manager. He became a global financial force. Over the decades, he used his wealth to fund political movements, democracy initiatives, and economic reforms through his open society foundations. To date, he has donated over $32 billion to causes ranging from education and human rights to pro-democracy movements in Eastern Europe. But this influence has also made him a controversial figure. Some admire him as a philanthropist and defender of democracy. Others see him as a market manipulator who profits from economic chaos. His financial moves in Thailand, Malaysia, and Russia have led to accusations that he destabilizes currencies for profit. And in recent years, conspiracy theories have painted him as a shadowy mastermind controlling global events. If you enjoyed this deep dive into the biggest financial deals in history, make sure to like, subscribe, and turn on notifications. Stay tuned. Our next episode is coming soon.